What is Binance Futures Funding Rate Arbitrage? Futures funding rate arbitrage is a trading strategy that allows users to hedge their positions in the futures market by taking an opposite position for the same trading pair in the spot market. It involves a trader simultaneously opening both long and short positions in different markets to profit from the funding fees. This delta-neutral strategy allows traders to hedge their positions. Any loss incurred from the futures market can theoretically be offset by the profit made in the spot and vice versa, while allowing traders to earn funding fees. Before we dig deep into how this strategy works and why it is relevant for the cryptocurrency futures market, let's first recap the mechanics of a perpetual futures contract. What is a perpetual futures contract? A perpetual futures contract is an agreement to buy or sell an asset in perpetuity or at an unspecified date in the future. Perpetual contracts are quite similar to traditional futures contracts, but the difference is that there is no settlement and expiration date in perpetuals. Since there is no expiration date, a mechanism called funding rate is used to balance traders' long and short positions. Its purpose is to ensure there is a relative convergence between the prices of the perpetual contract and the underlying asset. To learn more about price convergence in futures trading, refer to this article. The funding rate determines who pays or receives the funding fees based on market movement and their open positions. So when the funding rate is positive, i.e. the contract is trading above the underlying asset's price, the long positions pay funding fees to short positions, and vice versa. The futures funding rate arbitrage leverages this mechanism by executing two trades of the same trading pair of equal quantity in both spot and futures markets. How to use the Binance funding rate arbitrage bot? The Binance Futures Funding Rate Arbitrage bot automatically opens positions in opposite directions in both markets. This involves going short in one market and long in the other to receive the funding fee. Opening long and short positions allows traders to offset losses incurred in one position with profits gained from the other trade. When an arbitrager selects a crypto trading pair, the bot automatically initiates the transactions after analyzing the funding rate. A sample scenario. For example, let's consider the scenario where the funding rate is positive, i.e. longs pay shorts. With a 3-day 3D funding rate of 0.030%, the trader wants to use the trading bot for arbitrage on the BTC USDT symbol in the USDSM futures market. According to Binance market data, Bitcoin has dropped below 95,000 USDT and is now trading at 94,953.4375 USDT, with a narrowed 0.41% decrease in 24 hours. Glassnode reports unprecedented profit decline in altcoins. According to Blockbeats, Glassnode has reported a significant decline in the profitability of altcoins, with only about 5% of the altcoin supply currently in profitable state. This marks a deep surrender zone for altcoins. Meanwhile, Bitcoin's profitability is also beginning to sharply decrease. This unusual divergence between Bitcoin and altcoins is unprecedented in previous cycles. Robert Kiyosaki maintains bullish stance on Bitcoin despite market volatility. According to Cointelegraph, Robert Kiyosaki, renowned author of Rich Dad Poor Dad, has announced to his 2.8 million followers on X that he will not be selling his Bitcoin or gold despite recent market declines. In a post on Saturday, Kiyosaki attributed the downturn to a global cash shortage, stating, "The everything bubbles are bursting." He emphasized that the primary reason for the market crash is the worldwide need for cash. Kiyosaki anticipates what he refers to as the big print, referencing Lawrence Lepard's theory that governments will resort to extensive money creation to manage increasing debt levels. He predicts that this will enhance the value of gold, silver, Bitcoin, and Ethereum as fiat currencies lose value. For those in need of cash, he suggests selling some assets, noting that panic often arises from liquidity needs rather than a lack of conviction. In a subsequent post, Kiyosaki reiterated his long-term commitment to Bitcoin, stating, "I will buy more Bitcoin when the crash is over," and reminding followers of Bitcoin's 21 million supply cap. He also encouraged the formation of cash flow clubs centered around his board game, advocating for collective learning to prevent mistakes. Meanwhile, crypto influencer Mr. Crypto highlighted that the Bitcoin Fear and Greed Index has dropped to 16, indicating extreme fear, which is historically considered a potential buying opportunity. As Cointelegraph reported, Sentiment, an analytics firm, cautioned traders against assuming Bitcoin has reached its bottom. The firm noted that widespread confidence in a market floor often precedes further declines, citing Bitcoin's brief dip below $95,000 on Friday as a catalyst for premature optimism. Historically, sentiment suggests that market bottoms form when traders expect prices to fall further, rather than when they anticipate a rebound. Citing Bitcoin's brief dip below $95,000 on Friday as a catalyst for premature optimism. Historically, sentiment suggests that market bottoms form when traders expect prices to fall further, rather than when they anticipate a rebound. Scaramucci family invests in Bitcoin mining firm co-founded by Eric Trump. According to Blockbeats, Anthony Scaramucci, who briefly served as White House Communications Director under U.S. President Donald Trump, has become a vocal critic of the president. Despite this, Scaramucci and his son E.J. Scaramucci are backing American Bitcoin, a mining company co-founded by Eric Trump, with investment from Donald Trump Jr. In an interview with Fortune magazine, the Scaramucci family revealed that AG's investment firm, Solari Capital, led a $220 million funding round for the company in July. Other investors included Tony Robbins, Cardano founder Charles Hoskinson, seasoned investor Grant Cardone, and serial entrepreneur Peter Diamandis. The funding was completed before American Bitcoin went public through a reverse merger in September, although the list of investors was not disclosed at the time. AG stated that Solari Capital invested over $100 million in the company but declined to specify the exact amount. Anthony Scaramucci also contributed a small amount, without revealing the figure. Trader opened significant short positions on major cryptocurrencies. According to Touchflow, on November 16, a trader has initiated substantial short positions on several major cryptocurrencies, as monitored by the on-chain analysis platform LookInChain. The total value of these positions amounts to $196 million. The trader has opened a 40x leveraged short position on Bitcoin, holding 1,555.56 BTC, valued at $148.5 million. Additionally, a 20x leveraged short position has been established on XRP, with a holding of 12.34 million XRP, worth $27.4 million. Furthermore, a 10x leveraged short position has been opened on ZC, with a holding of 31,016 ZC, valued at $20.4 million. Former Fed governor resigns amid ethics concerns. According to Blockbeats, a former Federal Reserve Governor, Kugler, unexpectedly resigned after Federal Reserve Chairman Powell declined to approve her exemption from handling financial assets that violated the Fed's ethical guidelines. A Fed official revealed that Kugler was under investigation by the Fed's internal oversight body due to recent financial disclosure issues before her resignation in August. Documents released on Saturday indicate that officials from the Fed's ethics office refused to approve Kugler's latest financial disclosure materials, forwarding the matter to the Fed's Inspector General's office. These filings, published on the U.S. Office of Government Ethics website, suggest that her financial activities may have breached the Fed's internal ethical standards. Kugler announced her resignation on August 1, effective August 8, without specifying the reasons. Bitcoin News Today. Bitcoin ETFs log $866 million in outflows in second worst day ever. Analysts split on whether BTC is entering a bear market. Spot Bitcoin ETFs recorded $866 million in outflows on Thursday, the second worst day on record, as BTC slid to a 6-month low and investor demand weakened following the end of the 43-day U.S. government shutdown. Investor appetite for crypto-linked funds continued to deteriorate on Thursday despite renewed government funding, according to Farside Investors. The outflows also marked the second consecutive day of withdrawals, even as President Donald Trump signed a funding bill on Wednesday that keeps the government open until January 30, 2026. ETF demand weakens as Bitcoin drops to 6-month low. The sharp outflows mirrored Bitcoin's price action, with BTC falling to its lowest level in 6 months. Analysts warn the slowdown in ETF demand is particularly significant since ETFs and corporate accumulation led by Michael Saylor's strategy were the main drivers of Bitcoin's rally earlier in 2025. Still, some on-chain analysts argue the bull market structure remains intact.